Hello and welcome to today's special recording where we look at strategies to protect portfolios in what may turn out to be a reasonable top forming in global equity markets. The XJOs, we've had the sell-off in the December quarter. It's rebounded just over 50% of that sell-off. The rebounds happened in a short period of time in a space of about 4 or 5 weeks. So now's the time to be cautious. We've seen the first night of selling in the US. It's not unusual for the market to sort of retest these tops, so there may be another opportunity into the early or middle part of next week. But on probability, the market's now getting to a point where buying is exhausted and we get some level of consolidation. Therefore, it seems to us sensible that investors look to protect the positions in their portfolio. The temptation coming into dividend payment period over the next 4 weeks is to do nothing, but today we present an alternative through selling in the money covered calls, European style, to protect some downside and give you exposure to the upcoming dividends. So you would notice as an investor signals subscriber that we've had a large number of algorithm sell signals flagging the lower high structure. So I'll cover at the end of the video in more detail the strategy, but what I want to do now is just guide you through looking at the short opportunities in the market. So the way we do that is we go in the watch list, and let's just use the top 50 as an example for today, but you could do this with the top 20 or the top 100. We turn the filter on. Under signals, we just type in here sell, which then gets rid of all the buy signals. So now we're only looking at stocks under buy conditions. We click on the first code, and let's just start moving through these, and I'll just point out the increasing percentage of the number of stocks in the ASX that are under sell conditions. So AGL, lower low, lower high, under sell conditions. So an example here would be just to simply sell the stock, or what you could do is come down, sell, for example, a $20 European call option. It'll probably be something like a 2001 strike European call option, which protects your downside down to $20, and being a European option can't be exercised to expiry. So let's say we set that at the end of March. That then protects your position and gives you exposure to the upcoming dividend. But let's just roll through the number of stocks. So Aristocrat under sell conditions now. Amcor, it's an old signal. We've liked this stock. The stock's rallied back, but I think it's getting pretty close to resistance. So again, let's go back to that one. You could either take profit on the stock, or you could come down to maybe 1375 level, probably again 1376 being a European, selling in the money call and get exposure to the upcoming dividend. AMP under sell conditions. APA now under sell conditions. Horizon under sell. BHP under sell conditions. Brambles sell. It'll be a bit repetitive because obviously all of these are now under sell conditions. So just if you focus on the lower low, lower high structure, and the most recent signal being the sell up the top, and I'll move through these fairly quickly just as a reminder of the type of patterns that are forming in the market. So Fortescue clearly broke out from the sell signal, so it's a bit of an anomaly there. Insurance Australia, we've had a recent signal there. Mirvac. So a lot of these property trusts have had a big rally as interest rates have fallen globally. Medibank back up against the highs. NAB, it's an older signal there, but still under sell conditions. Newcrest, another anomaly there where it's broken out pretty strong from the sell condition, but as market volatility picks up, gold does better. Origin's under sell conditions. I've highlighted to our clients through the blog that Origin we see as maybe a bit of an anomaly as well, where we think the upcoming earnings result will be pretty solid. Orica under sell. Oil Search is. Qantas is, so just jumping back there. So Qantas, the high there at around $6. Ramsey, I think this is sufficiently defensive, this Ramsey business, so I'm not sure that there's major risks to the downside there. Rio under sell conditions, South 32 is. Stocklands is, the last signal was there. Sonic Healthcare is now under sell conditions. Santos is. Suncorp. So, let's just take Suncorp's example. You own the stock. You could come down and sell an in-the-money call to protect that position. Sydney Airports. So what we're starting to see is these yield names, Sydney Airports, Transurban, etc., pushing higher. So again, that's a reflection of interest rates going lower. Telstra. So it was under a sell condition there at 340. It's not under it's not under a sell condition from the last few days. This is Telstra's one where we think maybe the upcoming earnings result might surprise to the upside. Westpac under sell conditions. And there we are back to the index. So just a reminder, go into watch list, under signal, type in sell. That'll create only the sell signals within your watch list. Click on it, toggle through them, and have a look at them. Now, if on the other hand, you're looking at, well, what stocks do I own that I need to protect? So let's have a look at the ones that are under buy conditions and talk about how we approach this. So let's say we own ANZ, again, come a little bit below the market, go out to a European option. It protects your downside in the stock and gives you exposure to the upcoming dividend. So what we're cautious about, let's just have a look at the Dow Jones, is the market. We're seeing algorithm sell conditions across most of the market, at least across the Dow, the S&P, the NASDAQ, the XJO. So we think that it's time to actually take profit in stocks where available. Income positions in your portfolio, protect them through selling in the money calls. And then we'll just need to reassess over the next week or two if the downside starts to pick up. There's other strategies to profit from the downside in the market, buying put options in the index, buying or selling the futures contracts, but we'll start to cover that a bit more on the blog next week. Thank you for listening in.